Hello, this is the tradesight U.S. stocks and futures market preview for the week beginning Monday, the 29th of June 2015 and ending technically Friday, July 3rd, but really Thursday the 2nd due to the holiday. We'll talk about that more in a minute. Here's a look at the ES front month futures contract. This is the broad market futures daily chart. We always look at this first. It doesn't tell us anything new. We've been so flat. You can see a minor head and shoulders formation forming here since April now. Right on that 2062.50 green blue line. That's the TriStar level. That's kind of the magnet point for the market right now, and has been since Thanksgiving. Potentially a breakdown under that head and shoulders, although it's not a very tall head and shoulders formation, and whether it would lead to much is hard to say. But at the moment, we are kind of drifting back down towards that level, which we revisited just 2 weeks ago. Here's a look. So the S&P literally down less than a point for Russell rebalancing Friday. Didn't do much today. We'll look at that intraday in a moment. Here's the NDX, Nasdaq 100 index, after kind of sweeping near the highs, rolled over a bit this week and closed down 30 points on Friday itself. SOX was also down 17, coming up on that red static trend line. That's a pretty big move down for the SOX this week from 730 to under 700, 5%. Biotechs, we got that 13 sell signal back at the beginning of the week. Pointed that out on Tuesday, I'm sorry. And look what's happened ever since. Straight down Wednesday, Thursday, and Friday. That's twice in the last 3 months that sell signal has come to fruition on the biotech index. Google rolled over with the market, down almost 5 on Friday. Apple down 75 cents. Pretty much nowhere for the week. The VIX closed flat at $14 basically, after dipping down to 12 at one point in time, which is really a boring number for the VIX. Crude oil back under 60 bucks at 59.63. We've got gold was up $1.70 today. The trend, 10-day moving average of the trend dropped to 1.13. Trend closed at 0.81 on Friday. Let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the next day, on Monday, another big high number from 10 days ago is going to drop out of that average, the 10-day moving average. So we could see a bigger drop there. And there's a lot of low numbers here. So actually in the next 5 days or so, if we get some more low trend readings, we could actually get that moving average down very quickly. Remember, it's under 0.75 that you get a pretty heavy sell signal in the market if the 10-day moving average can get there. All right, let's take a look at Nasdaq volume to stop. And by the way, we were tracking Monday, Tuesday, Wednesday. You can see basically 1.5, 1.4 billion shares. About the same on Thursday, a little weaker. Friday, we were just barely ahead of that all day. But if you look at the final number, 2.58 billion shares. That's because of all the prints that go off at the close and right after for Russell rebalancing, as all the funds have to take on the matching sizes for what each stock represents now in the index. So huge volume, but it was not during the trading day. That's what always happens for Russell rebalancing. Nothing tradable or exciting, unfortunately. Here's the ES. We're going to go 10-minute candles so you can see the whole week and kind of analyze that. So Monday we gapped up, closed right where we opened. Tuesday we gapped up and filled, pretty flat day. Wednesday was a little more interesting, gapped down, reached up to fill the gap, which you like to do in downward markets, and then rolled to the downside and almost filled the gap from Monday. Thursday we gapped up, filled it immediately, tried to curl up and did not. Then we did fill that gap from Monday and closed low. Friday we opened with a gap up, filled it immediately, bounced around a bit. You'll notice the risk line and the 10-minute time frame from the 13 homer buy signal. That purple line was support at the low of the day, and we closed right on the VWAP for the end of the week. Here's the Nasdaq futures. Same basic layout, probably a little more negative overall for the week than the broad market. All right, so what do we look at next? I mean, there's not a lot we can derive from the charts given the fact that the market is so flat. We're going to focus on the economic data that's coming out. Let's take a look. So we've got on Monday, just the pending home sales number 30 minutes into the market. Not a big deal. Tuesday, the Case-Shiller 20-city index, Chicago PMI, and consumer spending. Now, these are some big numbers that can move the market, but Tuesday is the last day of the month, last day of the quarter, so it's called quarter-end window dressing. Most of the time, they've got these stocks priced by then where they want them for the end of quarter. So odds of a move Tuesday aren't usually that good, but we'll be here just in case, obviously. Wednesday, on the other hand, is the start of a whole new quarter, and they're free to move things now that the market's past that point. So we could get a move on Wednesday, and that'll probably be the most interesting day of the week. We've got the MBA mortgage index at 7 a.m., Challenger job cuts at 7:30, ADP employment change at 8:15, ISM index at 10 a.m., construction spending at 10 a.m., crude oil inventory is an hour in, auto and truck sales in the afternoon. So again, first day of the quarter and first day of the middle of the year, a lot of times you do get a move. If we didn't have the holiday schedule that we do this year, I'd almost certainly say that Wednesday and Thursday would be great. However, let's talk more about that in a second here. So then Thursday, there's still a lot of data coming out. Okay, we've got the weekly initial and continuing jobless claims. We've got the unemployment rate and non-farm payrolls. That's the monthly number that usually comes out on a Friday, but the markets are closed Friday, so it's coming out on Thursday for June. We've got factory orders 30 minutes in and natty gas an hour in. It's a lot of data, but keep in mind, here's the problem. We got a long weekend. Markets are closed Friday to celebrate the 4th of July holiday on Saturday, closed on Friday instead this year, which means we only have the first and the second, and of course, people head out early for a long weekend, so Thursday's likely to be dull after the first 90 minutes. So are they really going to come in for Wednesday and do a bunch of spectacular stuff now that they're free of statement printing and everything like that? Remains to be seen. We'll certainly look at Wednesday as targeted for the best trading day of the week, but we'll be available for Tuesday and also for Thursday morning. Monday's always iffy. Could be something good, could be not. Friday, we're closed. Don't have to worry about it. 4th of July holiday. Hope everybody have a great weekend. Charts as usual brought to you by eSignal. We will be in the lab helping you out. If you do find these videos useful, please like them on YouTube. YouTube does help us out. And we'll see what we can pull out of this week. Have a great week.